Hey Shay, how are you?
Doing great. I mean, it's hard not to with the market just being ripping today and yesterday. What a blow off top. Am I
I
right?
know, I know. The interesting part was, I guess, the news about there might be a time earlier next year because I think the initial messaging was higher for longer. I don't think that's the case anymore.
No, I mean, Powell definitely waved his white flag. He admitted he was too hawkish. And the thing that caught me off guard the most was he didn't have to see a 2% two handle print on any of the data before cutting rates. So that was always like the basis for me and I think others as well. Like there's no way there's gonna be a Q1 rate cut if we haven't even experienced a 2% two handle print. That doesn't have to be the case anymore. So now it just
Could
gave
be
the green
earlier.
lights for like, yes, we're good.
I was listening to a gentleman, Austin Goolsbee. He's one of the local Fed chairmen, I think Atlanta, if I'm not mistaken. And he had said in an interview about 2 weeks ago, he said, "You want to be like it is baking." And I was like, huh, what does that mean? He said, you want to take the cake out before it's fully baked because there's residual heat and that will cook it a little bit more. I was like, okay, I get that. And so I've been super long and super happy about it. Okay, good. So let's have a quick discussion. We're going to talk about fintech. So just for those of you guys who haven't had a chance to know about Shay, his handle is Stock Savvy Shay, and he's been on Twitter for quite a bit. A terrific following, talks about growth stocks, talks about a lot of different things. Follow him on Twitter. Great guy to know. Okay, so Shay, we're going to talk about fintech today. What do you think about fintech? This is just a simple chart that I saw. Tell me a little bit about more. What are you seeing? Do you follow fintech a lot? There are some companies obviously here that you have invested in, looked at, like them, don't like them. Tell me a little bit about what you think about the fintech space and where we are.
Yeah, so fintech is going to be a interesting topic for 2024. And the reason I say that is because you clearly see in November, even December, a rotation happening in the market where the Magnificent Seven or like the easy money that's been made on like the best of breed growth tech stocks or the defensive stocks that produce so much cash flow
Yeah.
at the expense of these industries that are highly competitive, who are highly vulnerable to rates and also consumer spend, and that's fintech. So you see the money flowing towards fintech past couple of weeks, where like SoFi is catching a bid, PayPal's catching a bid, um, even
Sure.
the riskier ones, Upstart is catching a bid, and like they're all just catching bids because they've been lagging for such a long time that they might have been severely punished for prematurely. And the reason I say that is because a lot of people expect a recession hit in 2024. Absolutely. However, I'm part of the camp where it's an election year. Recession will never happen in an election year, and government will never let that happen. There would be some kind of intervention. Rates, I thought maybe one or two rate cuts in 2024, minimum three, maybe even four now at the rate that we're going. So I think a lot of these fintech stocks just got beat so hard, and like now they're catching a bid because there isn't really another area in the market that you could invest your money in that it didn't run up 100% for the year. So I think that's why you're seeing them catch a bid, and you're going to notice that trend continue in 2024. That maybe consumers aren't as bad as we expected, as we've seen in the data. Like consumer sentiment keeps being bullish. Retail sales, like expecting negative, it's growing, and consumers are spending money. Yes, they're doing on buy now, pay later, but at the end of the day, like they're still spending money, and that's helping these businesses. And maybe it's not going to be as bad as we thought. So, um, I
Tell
think
me something. It's interesting you mentioned buy now, pay later. The number one performing stock in my list of 32 fintech companies is Affirm, 326% for the year. What do you think about the company? I know this was a darling back in 2020, 2021 when they went public. It went to a ridiculously high number. And then obviously took a break. And now it's up 326% for the year.
no, I think it's a pretender. I think it's a
Really?
great.
Okay,
I
this will be an interesting conversation. Not that I'm pro or against, but I
think
want to know more.
Yeah, so Affirm is a perfect stock to trade. So if you're anticipating rates being cut or some kind of vulnerability easing on these kind of fintech stocks, like Affirm is the best play, and same with Upstart. But the reason I say they're pretenders because it's a no moats commodity business, in my opinion. Like I think any financial institution can implement buy now, pay later if they want, but they really don't because the risk parameters are so high that we're still in the early innings of buy now, pay later that we don't know the implications of consumers like overextending themselves. So like we're gonna know that in like 2025, 2026 of how catastrophic buy now, pay later can be to consumers. We're experiencing it this year, like it skyrocketed in Black Friday. Like I forgot what the percentage was, but it was over 50% year over year for buy now, pay later. And I, I think people have similar appetites before, but they're making less money and they're going down that avenue. And that might be a major heartburn for companies like Affirm in a couple of years where consumers are gonna have some kind of trauma of like, wow, I overextended myself and now I'm stuck, and this $20 a month really is adding up because I've done it
Well, the
multiple times.
interesting thing is you can literally bifurcate the fintech space versus the finance and banking space into companies that do loans. Upstart is one firm, buy now, pay later, but it's essentially a loan,
Mm.
right? You're getting a loan. Maybe it's a zero interest loan, maybe it's a low interest loan, but it's a loan. The company makes loans. SoFi, loan driven company. And then you have the other kind, which are more of the payments, right? Payments, loans and banking seem to be very, very close. Of course, now the lines are blurring a large extent to it between what's a loan, what's a checking account. Everybody's giving a checking account. I wouldn't be surprised tomorrow if, actually, I'm not surprised. Costco has probably a bank, and it's Starbucks is a bank. They have a coffee company on the side. They make more money in fintech
Mhm.
in profit than they do in coffee. In fact, they're number one a fintech company, number two a milk company, and number three a coffee company. Coffee is the least of it. So I'm not surprised that you see this bifurcation. The other interesting part I wanted to find out is I know you've been talking about e-commerce as well. The interesting question to me is a lot of e-commerce companies are actually payments companies and fintech companies. You look at Shopify, you look at Mercado Libre, 58% of 58% for Mercado Libre and 40 something percent for Shopify's revenue comes from payments processing, not from quote unquote what Amazon calls e-commerce, right?
No, I mean you nailed it. Another one, Seeing Limited, their fintech division is the most bullish element of their whole business, in my opinion. But yeah, I mean these kind of you can say that the only moat available for fintech is a network effect.
Mhm.
So Mercado Libre, Shopify, like of course they're going to offer these payment services because their moat is this network effect. They want to own the whole ecosystem. So that's why it's been tricky this year for fintech stocks. So like, why own it when I can own Mercado Libre and I get some exposure to fintech Latin America because they're the king of LATAM, or even Shopify. Like, oh, if I want exposure in fintech for SMBs, I'll just go to Shopify because I'll get some exposure in that versus riskier plays like Bill.com or um, any of those type of similar businesses because it's so competitive. And the only moat for fintech stocks is a network effect. There really isn't any kind of, it's a commodity business. So you're noticing like Adyen, Braintree via PayPal, Stripe, like these are all B2B who just really are competing against one another for the white label service. And it's tricky because it is such a thin margin business. Like it really is like it's difficult. I wouldn't like that's why I have a hard time investing in fintechs because I love investing in category leaders and specifically stocks who have massive moats because it's indefensible. Like if a market does something breaks in market in 2024, these are the stocks that are going to perform the best still. And fintech, as we saw this year in the past 2 years, they've gotten destroyed because it's really hard to find a moat in these kind of stocks. Uh, so
What do
that's
you
why
think about what do you think about the argument that Affirm bulls make that Affirm doesn't check your credit score? They build their own version of a credit score, right? So what Affirm does is they will lend you money. Now they're having a credit profile of you on a firm, which may be different from what FICO does or TRW, Equifax, any of those guys do. What do you say to that argument? They're saying, hey, the mode is I have now a credit profile of Mukund or Shay, and I know how much to lend him or her or anything like that.
It's just not enough of a track history to like justify that, in my opinion. I mean, we saw that with Upstart 2 years ago. They FICO is the dinosaur. Like we're the next FICO, and like you can see these numbers that we're producing on the operational metrics that we're doing a good job in producing more of a return for these kind of high risk individuals. I just for like Affirm, going back to Affirm, like I don't see the bull case on like I just said it's a commodity business, no moats. But even if you go in their fundamentals, like they're growing in the teens for the next couple of years. They're not going to be have any kind of positive
Yeah.
earnings for like 4 to 5 years. Like, why bother? Like, why put risk? Like, why risk your capital in something like that when you can miss the next winners of this rally that everyone is wanting to have some kind of exposure in and Affirm? This thing can easily what's it right now? It's at $45. What's it what's it going to take for them to get $25? Like it can go even lower and lower. Like there's no
Well,
fundamental benchmark.
remember, they went from 90 to 10.
Yeah.
Going from 45 to 5 is not bad as much as going from 45 to 20, right?
No, yeah, absolutely. I mean, that's a one major knock I have on Square, even like a block, is the Afterpay acquisition. Like they thought it would just enhance their ecosystem more, to bring some more volume in. Like they overpaid. I know a lot of it was stock, but like again, like that's elevated risk that I don't want to have to factor into my DCF model for block. Like there's just too much headwind, too much noise for like not enough bottom line profitability. It just doesn't make sense. And again, Apple can just destroy everyone and just offer buy now, pay later feature on their card if they wanted. Like that's the kind of power that that's the power of like having no moats where like you can lose any kind of pricing power very easily.
And Apple has the balance sheet to back it up,
Exactly.
right? This is not a fly by night. Okay, the second best performing in my fintech list is Coinbase. Tell me about fintech and crypto. What's your opinion on fintech? Well, let's start with crypto first, and then we'll go to fintech.
So crypto is something that's not really in my wheelhouse. However, I am a fan of blockchain. But for Coinbase, I think they're benefiting a lot from the last man standing, where Binance News and all the other competitors
FTX
just
is gone.
everyone. So like it's just the last man standing. However, like why buy them when you can just buy the actual assets of Bitcoin and like Ethereum? And I hate brokerage businesses. Like it goes back to Futu or even Tiger. There's some like other European brokerages as well. It's like
Weibo.
yeah, exactly. Webull, like there really isn't a moat again. Like we're going back to it's a commoditized business. There's no moats. SoFi is attempting to have some kind of brokerage business. It's failing. Robinhood has a moat in their UX, their UI, like it's flawless. Everyone loves the way Robinhood's visuals are. It's just they that they don't really have a there's
The
no
interesting
moats.
part, the interesting part is, Shay, if you look at it, Robinhood had 21.6 million active MAUs the
Mm-hmm.
year they went public. That dropped to 14, dropped to 12. Okay, halved, literally almost halved. Okay,
Yeah.
in 2 years. They grew to 21 million in 5 years and then halved it in 2 years. And the mode I understand in terms of the UX, I've used Robinhood. It's really, really good, simple, easy to use. But Robinhood's business, like you mentioned, the transaction business that depends on the market doing well is what happens when brokerage does well.
Mm-hmm.
Market does well, brokerage does well. Market does badly or even sneezes, brokerage takes a tank. And most of Robinhood's users are profiling younger. And so they're not going to take any risk, so to speak, unless you are YOLO, zero DTE kind of a
Yeah.
person. But Robinhood's revenues have been closely tied to, and Coinbase as well, to transaction revenue. They make money when people transact, and people transact when the value of their equities go up or value of their Bitcoin goes up, not if not if it is going down.
Mm-hmm.
Very few people short it.
No, I mean, you noticed why they're transitioning from like the younger retail traders to like the older ones with like the gold feature, the IRA, where like we'll match you 3% if you transfer your IRA over to us, or any kind of transfer from any other brokerage will match that 1%. Like they want the older crowd with like higher amount of money to come to them. And I've actually had a couple friends who took advantage of that 3% matching. I'm like, I have $50,000 in Fidelity. why not just transfer to Robinhood? I'll make $1,500 instantly for no reason. That's like a smart move they're making. However, like you said, they've cut their MAUs have just gone destroyed past couple of years, and this could be a factor of multiple things. It could be a lot of the young retailers made a lot of money from COVID. And when you have a lot of money on options, like you don't go on Robinhood because the spreads are so wide that you lose a decent amount of money actually trading options on Robinhood. And a lot of experienced traders know that, so they just want to go elsewhere. So that could be a reason.
The other thing that is interesting is I don't know the exact number, but Robinhood mentioned that a certain percentage of their users just had their accounts wiped out.
Mm-hmm.
Right. So these are people that had made a good amount of money, let's say 200, $100,000 during the COVID timeframe. Stocks are up and to the right. They're making a lot of money. They held on, they held on, they held on, and they went
Yeah.
underwater. Right. The whole value proposition Robinhood said was, hey, we're getting them in with a trading account. Then we're going to expand it to have an IRA account. Then we're going to expand it to have a Roth account. Then they're going to expand it to have a crypto account. So they're suddenly creating 5 accounts out of one person coming in, right?
Mm-hmm.
And that's just stopped. It's stalled. The number of people that are opening multiple accounts or they have a different IRA account or a retirement account different from a 401k account or anything else, this just dramatically stopped. So unless they go and figure out a way to be able to go beyond just the stock trading element or crypto trading, which they also allow you to do, Robinhood is going to be challenged a little bit, and it's going to be so closely tied. It's like Schwab and E-Trade and any of those other businesses during the day. You're going to be tied to whether the market is a bull market or not.
Yeah, I mean, I think they're gonna get acquired with some kind of merger next 2 years. I mean, I made this pitch like on some spaces a couple weeks ago. A perfect merger of equals would be SoFi and Robinhood because they kind of have the same demo. SoFi wants to get in the brokerage business. They just butchered the UX of like, everyone hates using SoFi for trading. They just don't like it at all. Using Robinhood's UX and having that kind of crowd already installed in the synergy would make them own pretty much all 21 to 35-year-olds. For that's their demo.
What about Robinhood's banking business? I thought they had a checking account equivalent thing as well, or am I mistaken?
No, they did, and they stopped promoting it. They stopped they're pivoting away from that. It didn't really work for them. That's why I'm saying they're gonna merge with someone because they're pivoting, and I don't really know their long-term vision. Like they're kind of like in a gray area of like trading app. Are we gonna be for investors who are gonna be older? We're expanding to Europe, but we can't really make any money on transactions there because of the rules there, specifically England. Um, and I think they're scrambling a little, and you've noticed that this year. And Robinhood really doesn't have a long-term vision, and I just think they have incredible tech, and they're just gonna get scooped up by someone who actually has a legitimate business and banking and loans that just want a brokerage side of it.
In the fintech space, is there any company that you are bullish about at all?
Yeah, Shift 4, ticker
Before you are,
FOUR.
tell
Yeah.
me more about it. I have it on the list. I know you saw that.
Yeah, so they have an insane amount of partnerships. Pretty much, I like to call them the fintech of entertainment. So a lot of the venues that you go to, concerts, sporting events, like Shift 4 is the prominent POS of these venues. Um, I've mentioned it before, like they don't get the respect they deserve. Maybe it's because, oh, well, before I move on to the next point, like they have an amazing partnership with Starlink. If you guys are bullish on Elon Musk's company, they're the major partner of Starlink because
Wow.
the CEO used to be an astronaut, and he's like all about space. And if you think the next frontier after quantum computing, AI is space economy, this is a very interesting way to play that space, that thematic, because if they become the fintech leader in space economy, boy, are they freaking cheap right now with what they're trading at. But I do think that's one most exciting one. It's very cheap. I do think they might get acquired by Live Nation or some kind of take like Live Nation owns Ticketmaster, and it makes too much sense for Ticketmaster and Shift 4 to kind of be scooped up into one umbrella. But again, like you probably hear me talking about those mergers and acquisitions within the space is because it's such a crowded field and so competitive. There's going to be consolidation.
Yeah.
It just makes too much sense. So that's why this whole landscape or the bucket of fintech will change in 2 or 3 years drastically. And I do think Shift Four has a lot of interesting elements, or they're category leaders in specific niche of fintech that I'm very bullish on. That it's interesting to me.
The other interesting company is Lightspeed, also like fintech, sorry, payments, but competes with the four. There were quite a few of these in the Stone Coast, another one within the South American area. The interesting part is also that most of these companies are finding ways to be able to do the payments portion, but also compete with an Apple on Apple Pay. I mean, that thing is a juggernaut for the US. I
Mhm.
wouldn't be surprised if PayPal and Square just literally throw up their hands and say, okay, we're going to find a way to work with or compete with Apple more effectively because actually competition is going to be very tough against an Apple.
Yeah, I mean, you're right. I mean, the issue with Lightspeed and the same issue with Toast I have is you
Yeah,
need to be net income positive. Like you have to be in this kind of environments. There's no excuses not to be because everyone pivoted a year ago, sacrificed top line to have some kind of margin on the bottom line. Both are still, I can't speak on Toast or LSBD, but like if they do have some kind of margin, single digits, low single digits, why waste your time on that when you can exposure to other elements of fintech or like I mean, PayPal is 20% net income margins, super cheap. Uh, D local, we haven't really talked about ticker DLO. Like, listen, like they stole my freaking CFO from Mercado Libre to make their own CEO. I'm like FOMOing over that because he did a great job, and now D local's whole issue was are these numbers real? Like they're
right.
growing the top line 50% this year, 40% next year. They're
And
making.
they had a short seller talk
Mhm.
about why they didn't believe it as well, right? Before the Mercado Libre CFO went over to this, there was just a couple of months before that or something. We had a short seller. I think it was Edwin, if I'm not mistaken, right? Bear Cave.
Yeah, it was Edwin. And Pedro, who's the new CEO, went over there, and that kind of validated. Oh wow, he would never leave Mercado Libre, the king of Latin
If it was
America,
yeah,
if it was like something doesn't pass the sniff test
sketchy.
with the local. So that validated it. So I was like, okay, that pushed me up on the top of my watch list. The issue I have is Mercado Libre is my top six position in my portfolio. If I want D local, I'm a little heavily exposed in the Latin America region, which has some geopolitical risk. So maybe the other investors are also feeling that way of like, everyone owns Mercado Libre if you're a growth investor the past couple of years. What makes them want to sell some of that to buy some D local? They probably don't because they have some loyal brand loyalty to Mercado Libre. So
And Mercado
that's an
Libre has
element,
scale, man. Nobody else has the scale. In that part of the
100%.
world, nobody else has scale. I mean, I've been a Mercado Libre investor since 2000 and, if I'm not mistaken, 12 or 13, 10 years.
Jeez.
Just keep it. You know how I found out? I was listening to a friend of mine who was on some podcast. I mean, I've been to Amazon. I worked at Amazon for a couple of years. Before I went to Amazon, I heard about Mercado Libre. They said if there's any company to look at it as an Amazon competitor in the South America region, it's Mercado Libre. And of course, there are lots of people talking about Coupang being the same way and others, but Mercado Libre is special. They're a special company.
Do you know why they're so special? Is because I make this comparison all the time. C Limited and Mercado Libre, they could have been similar valuation right now.
Yeah.
The key difference from what Mercado Libre did is in 2021, instead of all the money they're making from the e-commerce boom, they weren't expanding in like Europe or Africa, regions that are outside of their realm to gain more GPV or whatever. They're trying to like make the Latin American king. They invest in their infrastructure. Because of that, they have this network effect where competitors like Amazon or even C Limited, like, why bother when we have to invest so much capex just to get into this region where Mercado Libre has like 5 year advantage already on like investing on that infrastructure. So that's shows like management, boom, check mark. Like they did a good job. They know their niche and they're capitalizing on it. Where C Limited, they're kind of bouncing around like
C Limited, I think, is one of those classic. I spread myself too thin when I had
mhm.
zero interest rate environment, right? They made solid margins and money in gaming. That was Garena is their cash cow. They took that, they could have stuck to maybe one of two, but they said, no, 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 we're not only going into e-commerce, third-party sales, we're also going to go into fintech. Okay, but we're not going to do it only in Indonesia and Southeast Asia. We're in Singapore. We're actually now going to Brazil. We're going to India. And
Mhm.
then they just he took everything back and said, no, I'm not, we're going to play a different game right now. This is a different environment. It's just taken them a little bit too long. They still, I think, are one of those that could turn around, but man, it's a hard slog for them right now.
Yeah, I mean, they opened the door for Tokopedia and Lazara to come eat their lunch in that region for sure. And C Limited is tricky because they have a ton of cash. Like they raised when they were like $400, I think. Like amazing timing. Good job, Forrest. But
Yeah,
like,
380. Forrest Lee got a ton of money at 380. He's got like $12 billion of cash in the bank.
geez, yeah, I mean,
They're breaking even, right? Not making money. They go a little bit up and down. Their growth is dramatically slow, but they're breaking even.
that's the thing. They're in the gray area. Like they're not growing enough to be excited. They're not making enough on the bottom line to be excited. Like I don't know what their long-term vision is, but they have the cash to make some kind of pivot. So that's the interesting element. And their fintech, like I don't know a better fintech player in that region than C Limited. Like if you guys look on their metrics for fintech past 2 years, it's freaking wild how fast they're growing and how big they're getting. And I'm a massive bull in Singapore. I think that region is going to be blowing up for next decades. C Limited was my favorite play to capitalize on that. But when you mismanage multiple tailwinds in a short time, like you're off. I'm not going to sacrifice my capital. I increased my Mercado Libre once I made that pivot. Mercado Libre is $1,600 and C Limited's barely under 40. So that just shows be quick on breaking your emotions with stock if they break your thesis and just pivot quickly. And I think right now, like my thesis has changed in fintech where I wouldn't touch it really all year because consumer spending, discretionary spending is going to get cuts really hard towards the end of this year. It did, but not as drastically as I thought. I think next year there's going to be a recession, but it's going to be beats in the market where it's going to be a recession, not widespread. Where it's safe to say business spending for tech, specifically B2B software names, the recession's behind them. We experienced it already the past two
Well, they
years.
had a dip. If you remember, Q2, Q1 was awful for a lot of the companies. Well, it was not awful in the earnings thing, but their forecasts for Q2, Q3 were so poor that they took a hit. A lot of them took a 20-30% shave on top of their 60% drawdown over 2022.
Yeah, I mean, definitely. So that just shows like it's a cycle. All this is just always a cycle. And for fintech specifically, we're at the bottom of like stage one turning to stage two breakout for a lot of these charts. So I think a lot of traders know that, like Magnificent Seven, Microsoft, Apple, um, these Nvidia,
Nvidia.
like they're like all near all-time highs or 52-week highs. How much juice is left when a lot of positivity is refactored in? I'm gonna not park my money there because there's too much opportunity risk or cost by doing that. So I'm gonna leave it to transition to some laggers like fintech, who they're not gonna be for dead. Like I think the fintech payment service space is growing at 20% CAGR for the rest of the decade. It's not dying. The issue with them was highly competitive, thin margins. Nobody knows who's going to be a real winner at the end of this. Like there's going to be a consolidation, and they don't want to park their money in something that's going to continue going down in a technical chart too.
Three quick questions before we wrap up. Best sectors for next year, 2024, your top three.
Top three, it would be semiconductors specifically exposed to auto sales. So some tickers that come to mind is Air Test Systems, ticker AEHR, Indie Semiconductor, ticker INDI, and On Semiconductor, ON. I think they got beat really hard this year. And as everyone knows, semiconductors will not go away. It's just they were exposed to auto sales and now rates
They're also
getting
cyclical.
cuts. Yeah, very cyclical. Uh, Second, I think pure cloud names. I think data is just in the beginning of exploding. AI, generative AI is going to create so many applications and so much data that businesses will have no idea what to do with that data. They just know they have to efficiently produce results from the data they have. And I think Datadog, CrowdStrike, Snowflake, MongoDB, they're going to capitalize on that. Third is fintech. I think fintech's really beats. I think PayPal, right now they're at $63. I think if they clear $65, like this name's gonna fly. It's really beaten down. And I think their new
And they got
CEO
a
is
new
really
CEO.
exciting.
Finally, it took them a
Yeah,
year to get a CEO.
100%. So the new CEO can like be a tailwind for them. Again, also fintech, all the headwinds of this year and last year, they quickly become tailwinds because those year-over-year comps become much easier to beat. And they're a lot of them are profitable. So like make sure you look into fintech stocks that they're profitable and they're growing at least in the high teens, because they're probably conservative. And like once they grow 20% plus and they're profitable, that really entices a lot of investors and they're willing to take that risk. So I think those are my three sectors I'm really bullish on. Very bearish on big tech.
Yeah, I think for me, cybersecurity, anything that flows down because of AI going into production. So
Mm-hmm.
this was the year of let me play with AI. I'm going to do a few, if you will, projects, and I'm going to do a few examples to see what works. Next year is AI production, AI going to production. So there'll be a little bit of backlash. I think a lot of people are going to get results that they're going to be very surprised to the negative side about, but still all the AI stocks will do well. Some of the names I really like, even though they may not be directly AI, I was in the semiconductor space. I actually like semiconductor TSM as a big
Oh
tech
my
name.
God. Yeah.
TSM is a
Geopolitical
big
risk
tech
though.
name. ASML is a big tech name, much, much better than maybe a Microsoft or an Apple or a Google or something like that. Uh, and then the second one, so cybersecurity is a very interesting play for me as well. The usual names come up there that will continue to do well, but CrowdStrike is an exceptional company, just absolutely killing it, doing a very good job. And the third one is when you see the ability for interest rates to be much, much more appealing, I think builders will start to do well.
Yeah.
I think anybody and everybody associated with construction, specifically, who can benefit a little bit from people. I mean, we all know in the US there's a supply challenge. The demand has been there for homes. It's just a huge supply challenge, and of course, regulations and all of that stuff. But builders, I'm pretty positive about. So I'm just going to keep watching that. But Shay, thank you very much for the discussion. It was terrific. See you again on Twitter. For all of the people who are watching this, please follow Shay on Twitter. And thank you very much. Take care, brother.
Awesome. Thanks everyone.
Bye.